Hey, what's up everybody? It's Jordan Dove with Dove and Associates. Hey, look, I've been getting hit with a lot of questions about mortgage rate volatility lately. Primarily, are mortgage rates going to stay low through 2021 or are they going to rise? So let's discuss it. Mortgage rates have hit record lows so many times recently, and some of you have been wondering if we'll see low rates continue throughout 2021 or if they'll start to rise. But first, how do interest rates work? Well, we have what's called the 10-year United States Treasury note yield. Historically, the lower the yield, the lower the interest rates. And coincidentally, the higher the yield, the higher the interest rates. Treasury yields affect fixed rate mortgages. When Treasury rates rise, so do rates on these mortgages. Banks then know they can raise their rates once their primary competitors do. Today, on February 19th, 2021, the 10-year note sits at 1.349%. To put that into perspective, 6 months ago, on August 19th, the 10-year was at 0.652%. To give you an example, we had a VA client who purchased a beautiful, massive home in Summerlin back in December. They locked in a 2.25% interest rate, and the lender gave them $2,247 in closing costs to take that rate. Today, that same 2.25 interest rate is costing around $14,000 to buy that same rate, a swing of over $16,000. Today's par rates are sitting in the high twos, which historically is extremely low and good for home buyers. Now, take a look at the average interest rates by decade. In the 70s, you had an average of 8.86%. Following in the 80s, it was a staggering average of 12.70%. The 90s, what's up millennials, dropped to 8.12%. The new millennia brought in average rates of 6.29%, and most recently, the 2010s averaged 4.09%. Today, the average mortgage interest rate sits at 2.81%. Recently, Freddie Mac released their quarterly forecast noting the average 30-year fixed-rate mortgage hit a record low over a dozen times in 2020, and the low interest rate environment is projected to continue through this year. We expect interest rates to average below 3% through the end of 2021. While this is a modest rise from 2020 averages, the recent vote by the Federal Reserve to keep interest rates anchored near zero should keep rates low. On this chart, Freddie Mac is projecting low rates going forward with a modest rise that's expected to continue through 2022. But Freddie Mac isn't the only authority forecasting low rates with a slight rise. Fannie Mae, the Mortgage Bankers Association, and the Association of Realtors also anticipate low rates with a small increase as 2021 continues on. Here's the quarterly breakdown of their projections and how they're expected to play out over the next year. It's important to note that while a small change in interest rates can have a substantial impact on monthly mortgage payments, these rates are still incredibly low compared to where they were just a couple of years ago. So Jordan, what does this mean for me, the buyer? Well, these low mortgage rates are creating an outstanding opportunity for current home buyers to get more for their money while staying within their budget. As the economy gets stronger and we recover from the challenges of 2020, it's natural for rates to potentially rise in response to a healthier economy. Mark Fleming, the chief economist at First American, reminds us, rising interest rates reduce house buying power and affordability, but it's often a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchase demand robust. With low rates fueling activity among hopeful buyers, there are a lot of people like you who are highly motivated and looking for homes to purchase right now. In this home seller's environment, it can be challenging to find a home to buy, but our team of elite real estate professionals have successfully navigated this difficult market for our clients over the past year. So, schedule an appointment with me to discuss your real estate goals. We have strategic lending partnerships in place with Chuck Barone of Right Choice Financing, who can assist you in the mortgage process and answer all of your finance questions. Working with our real estate team to navigate the complex buying process while rates are in your favor might be the best move that you can make. The bottom line is if you're ready to buy or sell, it may be wise to make your decision before mortgage rates begin to rise. If you have any questions, come stop by my office, or you can call me directly at 702-767-5557, or even send me a message or leave a comment. I would love to help you and your family. Take care now. Hey everyone, it's Jordan Dove with Dove & Associates. Please like and subscribe to our channel. If you find this information valuable, please share it with somebody that you know. Our goal is to educate as many people as we can about real estate and real estate financing, because we feel that the public is very misinformed about the process and everything that goes into buying and selling residential real estate, okay? So please like and subscribe, share this video. If you have any questions, leave them in the comments. We will answer every single question, either directly or through another video. So again, Jordan Dove, Dove & Associates, please like and subscribe. We will greatly appreciate it. We hope everyone's doing great, doing well, chasing their dreams. We wish you all good health and prosperity. Bye now.